I'm very excited to be bringing back to the Goldstein on Gelt show my very good friend Roger Whitney, who you have probably heard on the show before. Roger and I also did a very popular webinar right after the election when President Trump was elected, talking about what to expect when a new president gets elected in the White House. You know, Roger, what I'm trying to figure out is when you and I were talking about doing that webinar, we were trying to forecast who's going to be the president. And, of course, everyone was trying to forecast. And, you know, it turns out what I've noticed is that when people try to forecast the markets or the president or something, inevitably, a lot of them are wrong. But today, people have very strong feelings about what's going to happen in the market. Do you think people should actually invest based on how they feel the market's going to move, or should they just leave it up to some kind of asset allocation model?
That is really hard. I mean, that quote, today, people feel that, you know, something could really happen in the market. We could have said that, or a lot of people did, right before the election.
Right.
Man, if that Trump guy wins, we're doomed. And I sat in on presentations by very well-respected research analysts with huge, smart teams behind them that said, if Trump won, man, market right away, 10% plus down.
Wow.
So the problem with basing your investment strategy just on predictions is that you have to have all those things right.
So, Roger, tell me something. You're talking about the importance of, or realizing that people make mistakes with forecasting on the one hand. On the other hand, you know, they work with these money managers and financial managers and hedge fund managers and investment advisors. And it seems to me that clients often come to us and say, you know, Doug, I know you're not a prophet, but what should I do with my money? How should I invest, given what's going on in the world today? What do you tell them?
Well, what I talk about is having a solid process for how you actually make the decision to allocate money that's not predicated on predicting the future. So you start off with helping them realize that everything is unknowable. So, yeah, we got to make some smart assumptions about the future, but we don't want to spend too much time trying to predict it. We want to spend a lot more time looking at all the evidence on what asset classes can do so we can allocate prudently.
Yeah, you know what I think is important to realize is that if you try to guess the market and you're right, first of all, you're going to think that you've got a thing for it, you have a knack for it. And not only are you right, let's say if you think the market's at a high now, so you sell out, you then have to know when to buy back in, and then you're going to have to know when to sell again and when to buy again. And if this goes on forever, as opposed to people who, let's just say, follow the buy and hold approach. But in order to do that, you have to be willing to actually hold on when the market drops and not try to guess, well, are we at the bottom yet? Is it time to sell or time to buy? You know, one of the things I often find is funny is we talk to clients about being long-term investors, which in theory is a very good idea, but every single person on the planet is alive today. You know, they don't know what's going to be tomorrow, so they're actually looking at the world very short-term. And as advisors, we're always telling them to look long-term. Have you found any good ways of telling people or explaining to people how to look long-term and not worry about logging in this minute to see how their account is doing?
Well, I think you have to do a little bit of both. So I think you have to come to some framework for how you're going to make that allocation decision. And I keep coming back to that. So I'll give you an example. In my practice, I believe in the science of asset allocation, and I use it. But I also believe that you can't boil investing down to a science. You do have to have an art because assets do get overpriced and underpriced in different areas of the world. But on the active side, I think the question is, how much rope do you want to give yourself to act on those assumptions that X asset class is undervalued and that one's overvalued? And if you're going to do that, who are you going to hire to do it? And how high of a bar are you going to place to evaluate them to say, okay, yes, they have some unique view and they're doing it in a reasonable way? And I think most people don't put a high enough bar on any kind of manager that they hire. So I do believe that there is science, but I also think there is a little bit of art. And some of the things that you and I think, have to do is help them have a framework so they don't go total art, because it'll be that new modern stuff that nobody understands. And we don't want to go too science because it's going to be that thing that is super boring. So I think there's a balance there, but I don't think people have a prudent framework for working through those decisions. Even advisors, in my opinion. I think a lot of people just do it by intuition based on how optimistic or pessimistic they feel.
We're talking with Roger Whitney, the retirement answer man, who is neither optimistic nor pessimistic, or at least he won't tell us which way he's going. And I'm not even asking because I don't want people to walk away and say, well, the retirement answer man said we should, either buy or sell. Of course, as we always tell people, past performance is in fact no guarantee of future returns. And I often ask people, do you know why we tell you that? And I get a blank stare. And I say, because it's true. It's true because actually what happened yesterday is not necessarily an indication of what's going to happen tomorrow. One of the things I liked what you said a minute ago was that there are times, it's true, when asset classes are overvalued or undervalued. And then they have to find the right advisor or the right manager to help them deal with that, as opposed to saying they have to recognize that themselves and make a move. Do you think there's a time when clients need to do that, or is this something that can all be outsourced to an advisor?
Well, I think an individual can do it on their own, but they're going to have to be really prudent in business in the way that they do it. And I would say if you're going to use an advisor, you need to use an advisor that is more evolved than listening to their research departments and just working off of intuition. And that's a harder task to find someone that actually has a process that they do things. So I think you could do it on your own, and I think you could do it with an advisor, but whether you can find an advisor that's a lot worse than a client just because they don't have a process. And, it's interesting. And Doug, I'd be interested in your take. I know we don't have a lot of time, but when you have an advisor, a lot of times as an advisor, you want to do well for your clients. You're a pleaser. So sometimes you do things thinking you're going to please the clients by being right, and really you're putting them at risk because the cost of being wrong can actually hold them back rather than spring them forward.
I think it helps having been around the block a few times. I've been doing this gig for 25 years now. And it's certainly true. I think when I was younger, I tried to do everything for everyone because I wanted to help. And it's not, of course, today I still want to help, but I really feel that maybe the wisdom of the ages and a few gray hairs, or the lack of a few hairs altogether, has helped me to realize that there are not a million different ideas out there that everyone can try. And every time someone shows up with some new money-making idea, I don't have to investigate or invest in every single one out there, because I've seen enough of them to realize there's no quick route to riches. It's at least the way that I do it is a slow but steady approach. I try to design logical portfolios. I always tell people that the portfolios I design for them, I can't tell you if they're going to be right. I can only tell you next year what I should have done today. But I can tell you that they will be reasonable. It is a reasonable portfolio given who the client is, given his tolerance for risk and his time frame. Really, that's the best I think anyone can do. When people try to push you to do something one way or the other and sell their product because they happen to have some prophecy, I think that's a real sign to run away. Hey, Roger, I'm getting a sign now from my producer that we're out of time. But actually, I had a bunch more questions I wanted to ask you about the crisis that a lot of people feel is happening in retirement. If you could free up some time, maybe in a couple of days, we could dive right into that.
Okay, I'll come back. Yes, of course, man.
But in the meantime, tell me, how can people follow you if they just can't stand a moment without you? What's the best way to track you down?
Well, the easiest way is listening to the Retirement Answer Man podcast, where I talk about this stuff and talk about how to manage life and make decisions as you're becoming more independent. And you can find that on your local iTunes.
All right, we will put a link to that at the show notes of today's show. And Roger Whitney, I hope to see you again real soon.
Thank you, buddy.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.